In just a few hours, IBM will host its annual analyst meeting right here in New York. Industry watchers will hone in on Big Blue's new CEO, Sam Palmisano, to hear how he plans to lead IBM through the tech slowdown. Joel Wagonfeld is the Wagonfeld is the equity analyst at Bank of America Securities. He's joining us now with a preview of today's meeting. What do you need to hear from IBM as the stock hovers near its 52-week low?
Well, what I'd like to hear is some detail regarding what they're going to do to reduce their cost structure and improve their operating efficiency. What I think we're likely to hear is a relatively broad strategic overview from Sam Palmisano, given that it's his first analyst meeting under his tenure as CEO. He
was the one who last month had to come out and issue this warning. And not the most wonderful or palatable thing to do as the new CEO, but it leads you to wonder, how conservative is he? Is he a little bit more low-key than Lou Gerstner? What are we looking for from Sam Palmisano?
Well, he is a bit more low-key, I think, than Sam with respect to the analyst community and Wall Street. I think what we'll be looking for is any indication of strategic changes that he might make in the near term with respect to how the company's going to leverage its operating structure. One example might be additional ways that it could rationalize non-core businesses, similar to the way that it's done recently with PCs and HDDs.
Joel, one challenge it seems that Mr. Palmisano is going to face is that IBM isn't going to have so much leeway with accounting things. It didn't do anything wrong, but it always took advantage of accounting rules, be very aggressive to boost the earnings in the past. But now, of course, with the accounting industry under a lot of scrutiny, they may not be able to do that quite so much in the future to help kind of make their numbers.
Yeah, I wouldn't characterize it necessarily as excessively aggressive, but they should get less benefit going forward from essentially what are non-operating to many people sources of revenue and income. And as a result, in order to generate the kind of earnings leverage that we're hoping and expecting from them, they are going to have to improve their operating performance.
Right. And revenue, is that going to be a big driver? Is that going to have to have greater revenue increases than they've been talking about recently?
Well, not necessarily than they've been talking about recently. We're forecasting that they're going to have a revenue decline this year in 02 and a mid to high single-digit revenue growth in 03, which is consistent with what they've been talking about.
Let's look at margins here, because it's such a gigantic company. It's managed, at least when you're comparing it with companies at similar revenue rates. Here's this screen for you here. You see that IBM, pretty much in the middle there, is the one that's been able to stay above the flat line.
Yeah, they have greater ability to stabilize their operating margins as revenue fluctuates. The flip side of that is that as revenue reaccelerates, they of course get less potential upside leverage as well. But during times of uncertainty, IBM does offer relative stability.
What does the R&D spending picture look like?
Well, they spend about $5.2 billion a year on R&D, which is significantly more than anybody else in the industry. But because they have such a massive revenue stream, it's not a very significant part of their sales. I think going forward, it's going to remain relatively constant, because that's a key component of IBM's strategic advantage, is its development of proprietary technology.
This stock took a major hit in the past couple of weeks, and no doubt so many shareholders and analysts are flipping out as they see it below, 90. At one point it was in the 70s. What should we surmise? Will we see these higher numbers, or what, around 123? Will we see that again soon?
I doubt we're going to see 123 anytime soon. I think it's probably going to be trading in a range here, with 100 being kind of the upper end, and there is potentially some downside potential in terms of valuation if the stock goes back to previous levels.
Is hardware at all an issue here? Dell has quintupled its market share in the past couple of years.
Yeah, well, IBM doesn't compete directly with Dell in a very significant way, but Dell has commoditized the areas that it's gone into very aggressively, and I think that's having a negative impact for all of the hardware manufacturers as a result of increasing pressure on prices and increasing leverage that customers have.
Is this going to be a friendly audience for Sam Palmisano today?
Yeah, I think it probably will be. I don't think it'll be. I don't think it will be aggressively against him. No.
Do you own the stock?
No, I do not.
Does your company have an investment banking relationship with IBM?
I don't think so.
Okay. Get back to us. All right. Okay, Joel Wagonfeld, equity analyst for Bank of America Securities. Still ahead, the next and perhaps final chapter in the extraordinary saga of